Hey guys, what's going on? Gonna take a quick look here at Algorand. It's obviously been quite a while since I looked at this coin, so it's gonna be interesting. I haven't really touched this chart in a while, and I still have all the old markings from when I covered it probably about 4 or 5 months ago. If you take a look at all my videos, this is one of the last ones that I did, and it was published several months ago. And yeah, you can confirm that this is basically how I had the chart marked up. But before I get into the full analysis, I should mention a few things. First, if you're looking for a place to trade Algorand and pretty much any of the other coins that I talk about on this channel, you can get some sign-up bonuses in the links to the exchanges in the pinned comment and the description. Those are the exchanges that I personally use, and so far I like them a lot. So yeah, sign-up bonuses through those links. Also, if you're not subscribed and you want to get notified when I release these videos, just click subscribe, click the bell, and click on all, and that way you won't miss any of these updates. Okay, so back to Algorand. Okay, here I am on a weekly time frame. And this chart, as you can see, is not overly complicated. So we had this bull run up in 5 waves, and then we had this long correction that took the form of a falling wedge. This is typically a bullish chart pattern, but we came all the way down to these lows right here. So basically the lows of the previous bear market brought us to 9 cents. The bull market brought us over at approximately $3, and then we came all the way back down to 9 cents again. So this has been a brutal coin to hold. And recently we had broken out of this falling wedge. And actually, normally when you break out of a falling wedge like that, you can kind of estimate the target by measuring, kind of measure the widest part of the wedge, and you could project it from the breakout point, right? So broke out right here. And that would bring us theoretically right up to this line right here at around 50 cents, okay? So another thing I'm going to do to try to estimate where the potential targets and resistances are is you take a Fibonacci retracement, you run it from the top, the swing high, all the way down to the swing low here. And yeah, I mentioned this in previous videos, but the breakout target for this falling wedge lines up perfectly with this 50% retracement level, okay? And as I mentioned, that's 50 cents. So everything's lining up for the 50-cent level. However, if you look at the last video, you'll notice that I had this red box marked out as a strong level of potential resistance. And as you can see, we came right up to it and we got rejected hard off of it. Okay, so how did I know that this level right here would be such a strong level of resistance? Well, it's not that hard on a weekly time frame, which to me, this is the most important time frame for trading crypto. It gives you a pretty good macro analysis. And a lot of the whales place a lot of emphasis on this time frame because obviously they're moving a lot of money in and out of the market and they can't do it on small time frames. So for crypto, weekly time frame, to me, again, the most important. Okay, so based on the weekly time frame, you'll see that we had this resistance level right here, which lined up with the low of these candle bodies right here. So you see it was support actually all throughout this range. So when the price came below it and approaches it from underneath, that support, that broken support becomes resistance. And then basically I just drew a horizontal ray from the low of these candle bodies right here and across. And that's exactly why I knew that this level coming up here would be a strong level of resistance. But it wasn't just that. You'll see how I have the box. Well, the top of this box, the box I just used to represent a range. So this lower level of the box is based on the price action. Again, just look left. It's based on the previous price action and where the candle body closed here on a weekly time frame. The upper level of the box was based on the Fibonacci retracement. So I'll do it once again, and I'll show you why I had it marked where I do. So drag it from the top to the bottom, and you'll see right here, where we came up and wicked off of, that was the 382 Fibonacci retracement, okay? And if you look at it, we wicked right up to that 382. A lot of people had their sell orders right here. We got a strong rejection, and the candle body closed below the lower level of the box, again, which is based on the price action, okay? So I haven't been doing updates on this coin for several months, but if you watch my previous videos and you marked out the chart like I suggested that you do, maybe you took a short. So if you took a short up here, if you knew that sellers were going to come in, congratulations on that. I hope you made good money. Okay, so the question is, what's going to happen now? Obviously, this looks very bearish. If you know anything about chart patterns, this looks kind of like a head and shoulders. So you have the shoulder, the head, the right shoulder, and then we're just in a process of breaking the neckline right here. So doesn't look good. The target for a breakdown of a head and shoulders is actually you measure the distance from the neckline to the top of the head and you project it down, and that would actually bring us all the way back down here. So actually, if I were to extend this out, the target for the breakdown of this head and shoulders is all the way back down here at the lows, okay? Now, I'm not saying that's going to happen. However, just based on what I'm seeing right now, I would expect a visit to the next potential region of support. And if I zoom out, I have a horizontal level of support marked right here based off the low here, the candle body lows. And if I look to my right here, you'll see that, when the price broke down below that level that I just showed you, where this horizontal support and resistance line is, it's approximately 0.1398. When we came below it, the price came back up, got rejected. So we have multiple times where the price has responded off of this level, and we're so close to it right now. So I would think that if the price does end up coming back down to this, it's approximately 14 cents. That to me would be a high probability area for a bounce. So I personally may look to take a long position off this level if the price does come down to it. And actually, I'm considering it like a range. So the top of this range is going to be 14 cents, and the lower part is going to be based off the top of these candle bodies right here, and that's going to be around 0.1376. And if I were to enter a long position here, of course, I would analyze how the price is responding off these levels on a smaller time frame, and my stop loss would be placed below this line right here. Okay, and that's going to be around 0.1268. All right, so while this looks like a potential head and shoulders, I don't think we're going to come all the way back down here. If we do come all the way back down here, then obviously this is a good area to take a long position. But again, considering where we are in this market cycle, and we just had the halving in April, we're a couple months removed from the halving, I think the market should start picking up if it aligns with, the historical timeframes with the previous cycles, right? I'm going to be looking to enter a long position in this 14-cent range. Okay, and now that we have even more history at this level where we got rejected, this is going to be a tough one to crack, right? So if the price does make it back up here, so any long position that I enter off of this 14-cent range, I'm definitely going to be looking to take profits on that midterm trade. I'll probably scale out of that position. I'll take profits right here at around 23 cents based on the top of these candle bodies right here. And it was also a rejection point right here. So yeah, enter at 14, get out just shy of around 24 cents. So actually 23.5. And then beyond that, I would anticipate a lot of people looking to enter short positions or take profit up here at around 28 cents. Okay, so I'm going to be out here. However, if we start closing weekly candle bodies above this level, above this 28-cent level, that's going to be a pretty bullish sign, and I may look to re-enter my position once we're able to break the 50% retracement, which again is the top of this box. Okay, and when that happens, the next level I'm going to target is going to be up here, as I mentioned, at the 50-cent region, which is also the 50% retracement level based on the logarithmic scale. Okay, so just a quick update on Algorand. When I used to publish a lot of these videos, this is one of the most popular coins. So if you guys are still holding Algorand, hopefully you found this helpful. And once again, if you're not subscribed, click subscribe, click the bell, click on all if you want to get notified when I release new content. And if you're looking for a place to trade Algorand, check out the links in the pinned comment and the description. If you sign up with those links, you're going to get a sign up bonus, okay? All right, guys, take care. Have a good day. Bye.